Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is September the 2nd, 2025. Let's talk canola. This here is the weekly canola chart. It is a continuous chart, so it's a long-term chart. And you can see that we had this rally back here in October 2024, and it's kind of been trending higher ever since then. Of course, we had the recent sell-off here in June, and we are now trading below and this green 50-week moving average. It's still advancing, so I mean, you can't dismiss a rally, a price getting back above that 50-week moving average as it's advancing. But right now, we're $20 a ton below that level, so the probability is certainly reduced. So we really can't be bullish when we are below the 50-week moving average, in my opinion. We have this purple 200-week moving average overhead. It is starting to decline. Also, it's been declining for about a year now. At some point, the price will converge on that purple 200-week moving average. Whether it's going to happen through space with the price moving towards that 200-week moving average, or through time where the price consolidates sideways and the moving average comes down to it. So we really don't know what's going to happen, but we're going to keep our eyes peeled and keep all the options available to us. So I'm going to dirty this map up here a little bit, and let's go to the daily chart because it's a little better. So I identified this head and shoulders pattern on the daily canola futures chart. We had this neckline here that got broken, and that confirms the head and shoulders pattern. Once that neckline gets broken off, then what happens is you break the neckline, you get back a break above it, which really kind of shakes out the bears, and then you get back down below it, which we saw here back on August 12th with that nasty red candle. And we are finding some support from that 650 level. The price rallied back up to test that neckline, which almost always happens, and that is where we found some resistance again, and since then we've had a sell-off. Now I've got identified a head and shoulders measured move price target down here at 605, 606 level. What you do is take a peek of the head to the neckline, extrapolate that down here, so I got 605. So I think that's going to be a minimum price target. I have this Fibonacci level, 61.8 at 620. So perhaps I think we will test that at some point. I'm almost certain of that. And this minimum price move, it's a minimum price target. So it's the keyword is minimum. So, I think we'll get down to 605. But we have that round number of 600 just below. So that could bring in some buyers. But ultimately, I think, and I'll go back to this weekly chart just to show you what I'm looking at. I'm looking at these trend lines. So this first trend line just connects the low on September 24 and the low of March 25 this year. And to test that trend line, we're probably looking at that 580, maybe even 590 level. So if 600 doesn't hold, then I think we come back down there. We look for some more support at that level. But I do anticipate 605 to be the minimum price movement. Now, I don't think it's going to go in a straight line. So what happened was I did a little trade here. I'm going to take a little, actually the short position. So I'm short canola in the simulated demo account I'm using on the paper trading account on TradingView. So I'm short canola, giving back a bit of gains here today. But, where would be the next place to make some sales? Well, the next level of resistance, in my opinion, possible resistance around that 644, 640 level. And I think if the price rallies from this level back up to there, then that could be a good opportunity to make some paper or make some physical sales with a plan to replace on paper, either at a higher level or at a lower level on some sort of strength. But right now, we're trading at 632. I'm not sure if it's going to go up to 640 from this level, or maybe find some support at 620. Maybe it continues down to 605. But for physical sales, I think that 640 level would be an area of interest to me. It'd be an area where I'd be interested in taking some sales. and with the idea that we have continuation to the downside. So what happens in these markets? People look for different patterns and look for some sort of confluence of the indicators. And this being the daily chart, we have our 50-day moving average overhead, and it's declining. We also have this purple 200-day moving average, which is also flattening out to declining. Now, you've heard me say this before, expect nothing good below below 200-day moving average. Well, we're certainly below there now. So I think it's going to take a little bit of effort to get a buck above 200. We also have what they call death cross happening, probably back in maybe late September, perhaps last half of September, where that 50-day moving average is crossed below a 200-day moving average. It's a reference point. I think it's got significance when the price is near that crossover point. I don't think it's got much reference or anything to consider when its price is quite a distance or diverged from that crossover level. But keep that in mind. So people are looking at that. So if the price is near that crossover level, the death cross they call it, then anticipate some accelerated selling, and that would, price gets up to that level, 650 again, maybe that would prompt the selling to a lower level. But as far as physical sales, I'm looking at 640 as my next level of possible resistance, and I do think we get down to that 605, maybe and down to 580, 590. My name is Trent Klarenbach. Sunny in Saskatoon. Life's good.